Mr. Athey, James Athey's joining us now. You're a smart bloke, Senior Investment Manager, Aberdeen Standard Investments. You're here to talk about fixed income. What do you think about Bitcoin?
Morning, Steve. I was enjoying that. When you go through the various justifications for Bitcoin, and let's be honest, they've evolved over time. People seem to kind of ignore the idea of a use case now. It has become, a lifeboat against fiat currency without really any desire, appreciation, or belief that it will go on to be widespread. Widely used actually as a means of exchange, which I find very strange indeed. But to me, there are a couple of killer arguments that make me not believe that this is the future. Not least the fact that Bitcoin takes so unbelievably long to process a transaction now that, practically speaking, it can't be used for day-to-day use. That's not possible, and that's why we've seen forks within the Bitcoin community, numerous forks within the Bitcoin community, and that's why we see other cryptocurrencies which try to sell themselves as being more appropriate, shall we say, for day-to-day use. And therein lies the rub. The whole point about Bitcoin was that there was a limited supply. There can only ever be 21 million Bitcoins, but nobody thought to counter that with, yes, but there can be an infinite supply of alternative cryptocurrencies. So to me, that it doesn't even satisfy its own criteria for why it should have value, which is to say that there is a limited supply of something which is in desire, because actually there isn't a limited supply, there's an infinite supply, because people are just creating cryptocurrencies right, left, and sideways, which are popping up all over the show, and none of them has a use case. So each of them is equally a leap of faith. And you could argue that, yes, well, there will emerge one winner, and the network effects will make that winner have all the value of all the cryptocurrencies, but probably going to take quite a while to get there. Knowing which that winner will be very difficult if you can't argue that there is a solid use case. So I'm out.
Yeah, we better leave it there for a moment. I probably had so much vitriol piled upon me on social media for my last tirade. That's all right, though, because they can't get on here unless I tell them they can get on here. Right, OK, or the production team sneak one in, which they do occasionally. James Athey, right, you were here to talk about fixed income, treasuries, markets, tapering, what have you. So two questions. One, was the payroll that bad on Friday? I actually saw a couple of good things, well, I say positive things in it if you're looking for wage inflation and indeed the unemployment rate. Was it really that bad? Why are yields rallying and the underlying selling off? And does that mean tapering is gone? There you go. I've got three questions in one.
Sure thing. Yeah, I mean, was it that bad in normal times? If you get 250,000 jobs, added in a given month, obviously that's not bad. It was well below expectations. Clearly, there was some difference between the household survey and the establishment survey, because the unemployment component looked a lot stronger than would have been suggested by headlines payrolls growth. The household survey is a smaller sample set, so it should be less reliable. And then, as you say, there was the average hourly earnings, which looked pretty strong. I would argue that there's still massive composition effects in average hourly earnings. I don't really think it's a particularly useful series when you're trying to derive these sort of economic theory signals from it, which is to say, oh, look, this is evidence of tight labour markets and therefore upward wage pressure. That needs to be like for like. So that needs to be, what did a waiter get paid last year? What does a waiter get paid this year? Average hourly earnings is not that. It's the entire sort of earnings of the labour force divided by the number of hours worked. Therefore, if everybody who loses their job is minimum wage earner, the average will get skewed higher. So I don't see that as a particularly useful signal. Was it that weak? No. Will it really shift the needle for the Fed? No, I don't think so. Treasury market reaction in the aftermath was difficult to comprehend. I'm going to be somewhat cynical and say the market's just seeing what it wants to see. So it's desperately trying to shoehorn everything into a Goldilocks framework, a Goldilocks narrative. And for the market at the moment, Goldilocks is a steeper treasury curve, higher treasury yields, a weaker US dollar, and, a party time in equities.